Well, the first quarter of the year proved to be a fairly eventful one for the Northstar Global Flexible Fund. The year started well enough. The fund was nominated for a Raging Bull Award in the category for Best Performance over 3 years for global multi-asset flexible funds. But despite that, we were not immune to the correction in February. And fortunately, we had been reducing our equity exposure quite meaningfully so since the beginning of the year to account for less attractive underlying valuations. The fund ended the quarter down 10.1%. That's a little less than half the return of the MSCI World Index, which declined 21.1%, and meaningfully ahead also of peers, which were down 13.7% over the quarter. I'm pleased to say that the fund is fulfilling on its objective, that is to deliver equity-like returns with downside protection over a full market cycle and over every measurement period from 1 year all the way to 4 years for the strategy, and even to the inception date, the fund is ahead of the MSCI World Index. We took fairly decisive action during the quarter to address positions that were even remotely economically sensitive or high beta in nature, and also to consider exposures where we were concerned around balance sheet strength. Underlying equity selection continues to be the key driver of returns, and the underlying equity component of the fund outperformed the MSCI index by over 6% during the quarter and by over 800 basis points annualized over the last 3 years. Looking ahead, there's quite a lot of work underway to reassert or reaffirm valuations, and I can report that as things stand, the fund trades at roughly the same intrinsic value discount to that observed in the fourth quarter of 2018, which proved to be a fairly attractive entry point for global equities. So with that in mind, we're more than likely to continue to increase the equity exposure of the fund, which bottomed at about 47% during the quarter. Thank you.